Welcome back, everyone. Hopefully that caffeine's kicking in. Shout out to Massive.com for hosting the coffee booths. I'm Tommy Cotter. I have the privilege of moderating this next discussion on AI in finance, specifically how autonomous agents are reshaping everything from risk automation to workflow automation. And there's a lot of interesting things happening. So please help me welcome to the stage our panelists. Come on up, guys. We've got BMO, Domain Money, Lava, and Perplexity in the house. So let's jump in. If you guys can maybe give us a quick introduction on your name and how you fit the narrative. AJ, we'll start with you.
Sure. My name is AJ. I'm at Perplexity, and I lead our enterprise go-to-market and sales teams.
My name is Mitchell. I'm the founder and CEO of Lava. We help companies track their LLM usage by customer and by pricing plan, and then charge on it.
Hello, everybody. Armando Benitez. I'm with BMO Capital Markets. I lead the AI strategy, data strategy, and execution. And yeah, excited to be here.
I'm Adam Dell, the founder and CEO of Domain Money. We provide flat fee financial planning and wealth management solutions to the mass affluent segment.
Awesome. So let's jump right into this. I myself and a lot of people in the audience today are curious about what agents are actually doing today. So this first one to Armando, banks are notoriously slow to move with new technology, but it seems like BMO is leaning into its AI approach. So what specific functions are AI agents currently handling inside banks and fintech orgs?
Yeah, thank you. I believe there's an incredible opportunity today as it comes to AI and agents in general. Banks are notorious to be operations heavy, and that's where we see a lot of opportunities. And with the AI agents, the complexity of the type of problems we can solve is now able to solve today. And if we go back a year from today, a year back, what you would see is the chat interface where you might have an answer, you could have follow-up questions and whatnot. But now you have a whole ecosystem that has been evolving from the perspective of not only the large language models, but everything around them, how we monitor them, how to audit, how we make them work as we expect. And when you put all those pieces together, and the way I like to think about agents is one entity that does one thing and one thing only really well. And then when you put them all together, then going back to the point on complexity, then you can solve the really complex problems. So on our space, I'm gonna pick one. One of the places is looking at different contracts, documents, extracting information, summarization, giving that language interface to bankers. And now they can compare across deals, they can ask questions about the documents and get more time on strategizing what is the next move or negotiation of those deals. And so from that point of view, very excited to see where we're going. And that example really applies to many other lines of business. Operations heavy places at the bank, middle office, back office, really incredible opportunities, but they all follow the same pattern. And so this past year where we've been spending time putting together all the building blocks really is going to accelerate our time to delivery in the coming year.
Awesome. So Mitchell, obviously you're not involved in the banking side of things, but more so on the fintech org. Is there anything you'd like to add to that from the fintech perspective?
Yeah, definitely. So, across both my current company, Lava, and my previous startup, Lendtable, which we helped people get their 401k match if they couldn't afford to get it on their own, you're already seeing most fintech companies, your favorite fintech company is already using AI throughout their organization. So really the first steps, the way to think about it is, I think about it in the framework of AAA. The first step you're usually going to do is you're going to use AI to assist you. The next is you're going to use it to advise you, and then finally approve. I would say both fintech and most regulated industries have not gotten to approve yet. Like if you think about the time before AI is going to start approving billion-dollar transactions, making core decisions on fraud, things like that, we're just still a far ways off. But right now, especially in the assist layer, right now, every single fintech company is at this point using AI in order to either speed you up or help you even understand your context a lot better. And I think that's something we were even talking about with a lot of the tools available that we're already using. Like our organization uses Claude Code, and that actually allows our engineers to work so much better together. But it also allows us to make better payments decisions as well.
So everyone knows they need to adopt, whether they're actually going full force into that strategy. Adam, what are some of the biggest risks or concerns that stakeholders have about deploying agentic AI in finance?
Well, I think it's important to frame the problem set correctly. The idea that you can take a pile of documents and feed them to an LLM and get a cohesive response that you can rely on is really a fallacy. Now, that may change a couple of years down the road, but our approach has been to basically compartmentalize functions into discrete tasks. And so if you think about disability insurance as one topic, we've built agents that focus on pieces of a person's financial life and designed systems to extract insights that are relevant to that client's particular situation within the context of that particular insight. And so I think what you need to appreciate about the risks associated with AI is that a heavy reliance on the underlying foundational model as the end-all be-all is not a great strategy. And I like your analogy of assistance. We think of this as a thought partner with our certified financial planners. And, my belief is fundamentally that every bank, every robo, every fintech in the world will give you an AI financial planner for free. That's a race to the bottom. You can get an AI financial planner from Origin for $1 for 1 year, and you kind of get what you pay for. And so, of the 25 million people out there who fall below the traditional wealth management segment, who are looking for low cost, high quality, relevant financial advice and planning, I think the notion of a digital twin or an augmented human is really the next step in this technology evolution. It's not a, whole cloth replacement of the human component.
Humans are definitely, a major factor in how people are perceiving AI. It seems like every company that I speak with, they don't want to rely solely on an AI produced artifact, and they always want to see human in the loop. So I'm going to skip ahead one section, but I guess to Mitchell and Adam, what have you learned about human and AI collaboration in financial workflows, and what still needs improvement today?
I think the best way to use AI today is to recognize where it's strong and then use that to assist you, and then not to overestimate what you can do with it. So for example, one of the key things that I see a lot of folks do wrong with it, and a lot of organizations do wrong with it right off the bat, is AI is still historically pretty bad at bulk action. So imagine you need to do some sort of, imagine, for example, you're a financial advisor and you have, 100 accounts, right? Getting information across those accounts and then trying to have it do workflows, extrapolations on it, you're opening yourself up to a large surface area for it to do what's called hallucination or accidentally miscalculate. Oftentimes, what actually works a lot better is organizations that really use AI as a point solution on a specific record, on a specific person at a specific given moment in time. It's very, very good at that. And also what really good organizations do, actually you guys do this in many ways, is they actually run one piece of information or record through multiple LLMs to actually foundationally make sure it's not doing any hallucination. So right now, one of the ways to think about it is LLMs are fantastic, and just AI more broadly, at doing the first step, which is speeding up the work about work, enabling you to move through that faster. It's still not yet at a place where it can do what I would call, or as we say in a more engineering concept, right actions on your company or things of that nature. We're just not there yet. There's still too much risk for hallucination, especially in regulated industries like finance.
Yeah, just to sort of add to that, there are two areas where we have found the most yield. One is just in engineering. So our engineering teams have completely transformed the way they are organized. They're essentially, each individual contributor is basically a manager managing a set of agents that are developing code. And so our ability to produce code has just accelerated massively. And then to your point about bulk activity, as I said earlier in my prior comments, we've really defined discrete tasks and broken those out into individual functions. I'll give you a specific example. We ask clients, going back to my document analogy, we ask clients for all their financial information. Well, it's not all of it. We dynamically figure out what we need from them based on what they've told us they care about. And then our AI agents will basically email the client on behalf of an advisor or a paraplanner saying, hey, Mrs. Johnson, we noticed that you didn't upload this document or link this account. Can you please do that? Now, that doesn't seem like a complex thing, or that it would take a lot of time, or that it's that particularly challenging of an AI task. But the automation of that at scale across hundreds of discrete functions is really where the innovation that we've focused on has come from. And we've ripped out a lot of time from the planning process that we do for clients. On average, it takes us about 15, 20 hours to generate plans for clients. And we've ripped out about 5 hours. We think there's another 7 to 10 hours to be ripped out. And it's just a brute force engineering exercise that we're engaged in. And again, it's, a detailed sort of science of each little individual thing rather than kind of, okay, Mr. LLM, go figure this out.
Yeah, go ahead.
Yeah, I was just going to jump into, you mentioned human in the loop. And so one of the things that we help clients do, and we've seen is helpful, is having a different type of human in the loop experience for different types of activities. So depending on the severity or the importance, you want to make sure that you customize when that human in the loop is actually looking at something, what's being approved. So we have a way, not just us, but have ways to kind of customize that. The thing I would say is kind of back to your previous question on risks and concerns. I wouldn't maybe classify this technically as a risk or concern, but what I've seen be either really helpful or not is enablement, tool or use enablement. And so I think it's really important to stress for your teams, how to use these tools really well, have the right enablement programs in place to teach them, have that be something that happens, kind of continuously. And if not done well, that certainly is a risk or concern for the broader organization.
Totally. So this next topic, I just want to focus on probably what we're all most used to using AI for, which is information gathering and research. Mitchell, what are some information gathering use cases of AI agents, and what ones have you found to have the most tangible results?
Yeah, I mean, I can speak internally right off the bat, which is you now have a product researcher, market researcher in your team at any point in time. Every single organization has that ability. So if I'm trying to get up to speed on something, I want to understand, what did all of the companies who have tried to incorporate usage-based pricing before AI was a thing, what did they fail at? What did they do wrong? There's two ways you can do that. In the past, the way I used to do it is I used to ping as many people who left a company and said, please let me get on your calendar, and I'd love to get all this information. But now, of course, that's still very important for the qualitative, but you actually can get the quantitative, which is just so fast. You can literally just use an LLM and get that understanding. And you're not only getting that across the press releases, you're also getting that across the API docs, so you can understand foundationally how they built something. You can get all of that so fast. So probably one of the first and most important information gathering things you can do, especially in our space, is understand foundationally what has been done before, both from an ideological standpoint, but even from a technical standpoint. It's actually wild. It's what used to be, in the founder cycle, probably about 3 to 6 months of your time is just understanding. You're now able to do that in minutes, and that's a complete unlock for your speed, and that's why startups are moving so fast.
AJ, Perplexity has kind of reinvented the way that users try to find their information kind of post Google search era, right? In the past, when you wanted to get an answer, you would go to Google and then you would sift your way through, 4 sponsored posts right at the top, right? What are some unique use cases of information gathering from Perplexity?
Yeah, what you just said is kind of the first part of my pitch, honestly, which is which is nice. And what I would say is that today the searching or the ability to search at scale is profound. We've built our own web index, and you're also able to connect different applications, Salesforce, Notion, Linear. And so the ability to gather this information is really impressive. I think the challenge is for each company weighting the different sources of information to be valuable for use cases and what matters most to you. So that's really the challenge now is, yes, we have access to all this information, but how do you weight it to come in this Word doc that was created a year ago versus one that was created last month. But that Word doc a year ago might have more information that's relevant for a certain reason. It's really hard to understand. And so there's this practice of training the LLM, the model, per company that can happen. I'll give you 2 use cases that we're seeing really resonate with finance folks. The first is agentic triggers on activities. So let's say you have a investment team that really wants to know, for every, in this industry, for every earnings call that happens, I want a summarized report within a few minutes to understand what's happening. That trigger on the activity is an agentic workflow that you can set up. Another use case is sentiment analysis. So I mentioned all that access to information. You can go look at, on the live web, different types of information, understand the sentiment, and then make decisions off of that. So just a few examples for you.
Are there any other use cases?
Yeah, so as the CEO, it's of a company, it's really nice to have kind of an unlimited number of workforce agents that can do stuff for you. So one of the things that I use it for personally is we have kind of a unique business model at Domain. We actually partner, we have a direct business, but we also have an indirect business where we partner with larger RIAs and we serve their unqualified leads on a white label basis. And there's lots of RIAs out there, right? There's Wealth Enhancement Group, Corient, these huge guys, but there are also smaller operators that have YouTube channels. And so one of the things I set up is a automatic notification whenever a YouTuber who's a financial influencer or certified financial planner gets a certain number of views on a video, I have it trigger a notification to me. It then automatically generates an email that I send to the person saying, hey, did you get any unqualified leads that fall below your minimum? We can help you with that. And I sort of have this sales agent that's working for me 24/7 without a lot of oversight, administration, salary, insurance, sick days, none of that, right? And you can build an infinite number of those, and that's kind of incredible from an operational leverage standpoint.
I want to take a second to talk about regulation and trust, which is probably the most underdeveloped aspect of AI and agents in general. This one is for you, Armando and Mitchell. How do regulatory bodies view rapid agent adoption, and are there emerging compliance frameworks for this?
Yeah. From the regulatory perspective, there's no one specific framework on agentic AI, but regulators have been in this business for quite a number of years. So if you go back and see what we have today in terms of model governance, there is a baseline, and that is where we're starting. However, given the complexity and really the speed at which the space is moving, nobody knows how to regulate it. And so what's happening now, financial institutions are having conversations with each other, and together we're going to come up with a framework. BMO has a trustworthy AI.
What could go wrong?
Pardon? What could go wrong? That's right. We have a trustworthy AI framework that helps us ensure that before we write one line of code or any project gets off the ground, we bring all the stakeholders to ensure that all the perspectives as regards to risk are taken into account. But also the conversation is regulators and financial institutions, fintechs coming into the picture. We're not alone on this. And that to me is what's going to take to make a successful regulation, that we all come to the table, share all perspectives, and from that decide a framework that will make sense.
Yeah, I think there's like two parts to this question that are very interesting. Number one is around how actually regulation is getting sped up because of AI. And then number two is how do we think of regulation itself in the age of AI? And I think the first one you're already seeing, one of the most successful AI startups out right now is this company called Delve, and they're just trying to speed up SOC 2 compliance. Or, I was at Money 2020 a week ago, and, I'm talking with this company called Brico. They just raised their Series A, and their job is to speed up your ability to get things like money transmitter licenses. And the reason why is at the end of the day, it's all still getting approved by humans, but back to that AAA narrative, right now, so much of regulation can be in the assist category, where you can speed up a lot of those document flows, information flows with AI. So we're seeing a lot of movement there. But I think the second one is how people have approached regulation and like, how do we think about it? And I think the key concept that people are starting to kind of hone in on is not necessarily that all these newfound understanding of how do we stop LLMs and things like that. You're not trusting in vetting the LLM. You're trusting in vetting the controls that govern the LLM. And we actually understand those very well, right? If you have something that's going to be doing actions on money, there's rules for that. If you have something that's going to be doing actions on data, there's rules for that. And so what we've been doing and what you've seen a lot in the space is people confining things actually based on controls and not on how do we stop LLMs from doing X, Y, and Z. It's like more about the sandbox that you let an LLM play inside of as opposed to the LLM itself. Because you guys are right. I mean, we're still figuring out LLMs a lot, and also how they work in and of itself is inherently a black box. Right? It's information in, output out. And that's actually very difficult to regulate that because of the fact that it isn't so clear every single step what is happening in order to get to an output.
I want to take these last few minutes here to go back to human and AI collaboration in general. I guess, Adam, where do humans still outperform agents today?
Genuine empathy, genuine understanding, and continuity. Financial planning and wealth management is not a one and done function. It is a lifelong journey. There's a reason why wealth management firms have a 90 to 95% retention rate with clients historically. It's because they enter into a relationship with that client, and that relationship evolves over time. They see their kids graduate from college. They see grandchildren be born. They see retirement. They see sailing off into the sunset with job well done. And those phases of life require extremely different kinds of skills, and they require a continuity of an understanding. And so I think it's going to be some time before people establish long-term, meaningful relationships with an AI agent that can sustain. Now, there are plenty of examples of people who have built, non-sexual relationships with AI, or they've built friendships with AI, and that stuff is burgeoning. But I think it's going to be a long time before you get rid of a human. And I certainly don't want an AI to represent me in court. I don't want an AI to be my doctor, and I don't want an AI to be my financial planner. Now, I do want my doctor, my lawyer, and my financial planner to use every tool available to augment their capabilities. And so I think a lot of it is almost a digital twin. I imagine a world where you'll get an email from your advisor, it'll have a video embedded in that email, and it will describe some change that they want to make to your portfolio or your trust, given changes in your life. And you can watch that video. That video is entirely generated by AI. It is your advisor's digital twin. And if you want to proceed with the recommended action, you say proceed. And if you want to talk to your advisor, you say book a meeting. And your actual human advisor with whom you have a long-term relationship with will emerge. And I think that kind of dynamic is the future of AI for quite some time.
So all these different use cases, obviously, AI is beneficial, it's helpful, but how do we actually measure the ROI? Are there any measurable use cases of ROI that any of you guys have seen within your organizations?
Let's say, depending on the use case, in early stages of AI has been focused on efficiency. So, the number of hours that are saved, how much faster we're getting to the answer, how many more clients can we serve, and we treat that like as any other project, right? We measure, and from those measurements, we determine ROI.
Yeah, I think efficiency and time saved is where it started, and it's challenging to measure more. Well, I'll give you an example. One that we're seeing folks in the investor space now start to look at is alpha via AI. So this investment idea or this analysis was driven by AI, and that then is measured versus non-AI use. And again, it's early stages, but that's something where we're starting to see larger banks and PE VCs look at that as well.
Awesome. My last question for you guys today is, how are AI agents improving speed and quality of research for analysts and product teams?
I mean, it's an order of magnitude change. You can write a product brief in now seconds if you know what you're doing, as opposed to normally, back before I started companies, I ran Facebook's digital walls for Asia and Latin America. Those took a long time. And so what is days is now seconds.
Perfect. We're out of time, but thank you guys. Give these guys a hand.